Good evening and welcome to Traders Group. This evening we need to re-examine the information that we put up on screen last week and make a decision. Essentially, is the trend line that we were talking about last week, is it valid and is it still in play? And so this is a weekly chart on screen of the S&P 500. And I just want to, watch this quite carefully because a major break below that trend line would indicate something different is occurring. I don't believe that to be so, and I think our analysis from last week is absolutely still in play. I just like to have started with a very big picture of the S&P 500 on the weekly, coming down now to a bit more detail on the daily. Looking at a daily chart, we can absolutely see that this trend line has been honoured and still has not been in any way threatened. And we can also notice that the 20-period moving average, that's 20-period exponential moving average, is starting to flatten and move to the upside. As I'm talking, Ellen said that this index is still tracking above the 200-period moving average. Just for the sake of completeness, I think it's an important point because analysts around the world watch the 200-period moving average as a major level of support. So just let me put up the 200, and we can see that that is a true statement. It's the thin blue line tracking below the market, and that is an important point. There's also other indicators, something called the death cross. I won't put it up this week, but I did have a look at it to see. It's the crossing of the 50, I think, over the 200. I haven't looked at it for so many decades. It's was still not in play last week. So I think the most important is what we're looking at the moment, short-term 20-period exponential and longer big picture stuff, 200, and everything's intact, trend line's intact. So from a technical price perspective, is this market going to the upside? Absolutely. What else can we look at to confirm that point of view? Pattern, as we know, is not a predictor of the future. It's a revelation of what's happening in the present. The only preemptive elements to the market are volume and VIX behavior. That's the only thing that I know of that preempts what's about to happen. So if we just have a look at the volume behavior, first of all, within the S&P 500, I can confirm that there's been a fairly significant shift in positive volume behavior coming up as time has moved forward from last week. So this is the right-hand side of a potential pattern. The pattern, if we put it on a weekly chart, would be a W pattern. Let's just quickly do that. And it is not confirmed. So we've had a test of a low. We've had a midpoint, and we need the pattern to confirm. If that pattern does confirm by crossing its midpoint, this is a very broad-based pattern. And very broad-based patterns usually are the base for very large extensions in price. I'll give you an example. The last really broad-based W pattern, which extended over 2 months, from my memory, was back during the global financial crisis. No, so it wasn't the GFC. It was the Greek sovereign debt default crisis. And market had a really big collapse. Just be patient. I'm just tracking back with price. And in 2010, the market did a massive test and retest over a very large period of time. And now I've gone back way too far. Just give me one moment. That was not it. This is it here. So this was at the time, a really confusing mess, and probably has parallels to the evolution of today's market, where it's not easy in real time to get your brain around what's happening because you can't see to the future, and the volatility of the accumulation is extreme. If we go and look at some of the price bars in the current W pattern, the volatility of daily price is sometimes has been extreme. And I would suggest that if it unfolds as it does or has done back in history, it's still not totally complete. The market will confirm, we may get this big, deep pullback, which would represent the V of a large accumulation pattern, W and V. And then after that's complete comes the extension. If any of this is true, we're still months off before we've completed the accumulation phase. It took 2 months for this base, or not quite 2 months for this base to form up. And in the current environment, it's not quite 2 months for the base to form up from test to retest. And then there was another 2 months where market confirmed and pulled back. But then what came from that was a very large extension over a period of 4 to 5 months. The timing of this is not the same as at the present time, but that's the best pattern I could find from history that sort of links into what's happening in the present. Just coming back to the present. Just give me one moment. Again, the characteristics are there. A huge, messy, looking high volatile pattern with big movements, big daily movements, and the only thing that I suppose is of concern, which should be eliminated pretty soon, is this really should start moving very quickly out of this low. It can't sit here can't sit here forever, and it's actually been here a little bit too long for my comfort. And I would expect by next week it'd start to break out of this. The volume says it will, and there's my third piece of information that says it probably will, and that's the VIX. As this market has been generally going nowhere or falling in the past 2 to 3 days and even weeks, maybe on the US VIX, what I've been observing is that the VIX has been tracking down. So if the market's going down, and this is actually really apparent on the Australian market, if the market's going down, VIX should be going up. If the market's going down, the VIX is going down. It's an interesting sign of strength. And it's something that we talked about not so many months ago. And I'll just bring it up and remind you, back in January of this year, we were observing a strongly upward moving SPX through the month of January. But at the same time, we were observing a strongly upward moving VIX contract. It's the reverse. It shouldn't be correlated. It should be opposite. It should be a negative correlation. So that's interesting to me. It's a bullish signal. It's something that I've only just picked up through talking to someone today. So I have to watch it to see if that's a sort of a forward-leading indicator. But I'll watch that. It is another element that tells me this market is going to maintain its level of support at the previous trend line that we've talked about, and it should be going up. Other markets around in the US that tell me that things are firming to the upside would be IWM. IWM, unlike other indices last night, had a very strong move to the upside. In fact, I think it was up 0.55. I haven't got the numbers on. Sorry, I can't tell you. It's off my screen for some reason. It was up strong, and the reverse happened on the large indices, such as S&P 500, which was down 0.5%. And I think IWM was up greater than 1%. Oh, sorry, greater than 0.5%. Bill's asking a question. Why shouldn't the market just go sideways for some time given the worldwide uncertainty? Why shouldn't it? I don't know, Bill. It can do whatever it's going to do. I don't like to overlay a future which I don't and can't predict. So why shouldn't the market go sideways? It may do that. The only issue with that is normally markets in accumulation, complete accumulation, and they complete patterns, and they don't go sideways. There are very few examples you could show me where markets are tracking sideways for more than a few weeks. They always have a move to the upside or the downside. So, Bill, point taken, but unlikely to continue sideways. While I'm talking, Alan's overlaid a reason why there is probably little chance of the market to continue sideways, and that is the earnings season is a major driver, and I actually heard that last week. The earnings season is a major driver of price, And I think, I'd have to check my dates, in the United States, that probably is soon on the horizon. Therefore, that would be your trigger to go, to push yourselves out of this low. There is a major fundamental, though, I believe, that will drive this market, and I'm talking S&P 500 out of its low, and that's the shift in the fundamental talk between China and the US. As we are all aware, the greatest fear of everyone, it should be your fear, is a tariff war between China and the United States. I think Mr. Trump is right. I didn't realize that imports into China from the United States automotive industry had a 25% tariff. That's crazy. Imports into the US from Chinese vehicles has a 5% tariff. If that's the level of imbalance, how can you argue that Mr. Trump is wrong? That's not fair. So I believe that he's onto something here. The Chinese cannot afford to have an unstable economy. They have to keep their economic system stable. They need to continually deliver, not the significant and level of growth that they've done in the past decades, but they need to keep it stable. They cannot afford economic instability. It will flow through to political instability. Therefore, I think Trump's got a really strong hand. I think he's right. And as we saw earlier this week, the Chinese backed off just a fraction, and they said they'll adjust the tariffs on one item. That's automobiles. It's probably the biggest point of contention. And also the Premier of China mentioned about financial markets, which is actually a really big story. Financial markets are opaque in China. You don't know what's going on. The level of regulation is not the same as in Australia. The level of accountancy is not the same as in Australia, and it is riddled with fraud within the Chinese market. In fact, there's a huge backstory. I don't think I've got time to talk about it this evening. Maybe I have. It's connected to, very quickly, it's connected to Chinese companies launching on US exchanges, and the companies that are launching on the US exchanges are basically a fraud. And there's an increasing level of fraud happening through intermediaries. This story is a bit complex to give over in just such a short time, but there's a huge level of fraud that has occurred and is being proven to actually occurring. And the companies that are launching are doing so on the basis of, it's just pure fraud. They're using, the books are being done by big named companies such as big accountancy firms, but these accountancy firms are branches in China, and then they've realised that the numbers, everything's fraudulent. And I've seen a documentary recently. It's not something that's made up. One of these guys that's onto it in the US, he sat in China, put a camera in front of I think it was a fertilizer factory, which had launched in the United States, and he recorded every truck movement for 3 months coming in and out of this particular processing factory. Now, according to their balance sheet, there should have been hundreds of trucks moving in and out of that to produce the numbers, and he recorded one per week. So, there should have been hundreds of employees, and he sent one of his spies over to give over free tea sales to the guy at the gate, and the guy said there's only 10 employees in the factory. So there's something that's actually a big story that's evolving. Actually, it hasn't hit, I think, general finance yet, but if it does continue, and it is a really big story, it's actually a big problem, because the Chinese have just sucked out millions of dollars out of the US economy through fraud. And Barry just put in BABA. What's that? Is that Alibaba, Barry? This story will start, Barry just said yes. This story that I just told, and I told it in very little detail, it hasn't hit the general press. Do not own Chinese stocks. And they're doing it in Australia as well. And here's the rub. The Chinese will not prosecute fraud if you're sucking money out of another country. They'll prosecute fraud within China, but they don't care about fraudulent companies listing on US exchanges and taking US pension funds. They don't care. So this is a really big deal. Okay, I'm right off topic. Sorry for that. I'll just come back on topic to the market. So this looks pretty good at the moment. Broad-based from a technical perspective, broad-based patterns equal big extensions, and the fundamentals of the market, I believe, good. The two biggest fundamentals disrupting the market has been North Korea, which appears to be, I don't know whether it's being solved or not, but they're working on it, and that's not a factor anymore. And the other one's been this tariff war, and the Chinese premier is making very conciliatory he's saying very conciliatory words, which indicate movement on that front. Hence, Trump's got no reason to keep on hammering them. He just needs to negotiate and get the deal that he wants. So fundamentally, we're in a global synchronized bull market. Globally, fundamentals in the biggest economic regions are good. The US is looking fantastic. It's a strong economy. The US Fed said last night in their minutes that they are increasing the number of interest rate rises in the coming years. What does that mean? That means that the US economy is growing very strongly, and that's a lever that they've got to reduce growth and maintain low inflation. This is good. All this stuff's good. So everything's pointing to an ongoing expansion. Okay, so Bill just said that was great. He'd be very okay. I'll tell you, Bill, where I got all that information from. I got it off Netflix, to be honest, guys. If I've got to go back, it was a recently launched documentary, and I couldn't believe it. And I actually started researching it today, and it looks like it's all true. Alan just put in, Trump against Syria and Russia with missiles is the only fear, unless you have Raytheon shares. Yeah, but Alan, with Syria, we're not talking about a war. We're talking about a few well-targeted missiles into a base which is empty, just to send a message. They're not going to start a war. I can't give you the name of the documentary, Bill, but I will next week. I've got to go look it up again. It's pretty damn interesting. And you can flesh out the whole story. The big thing is to not own Chinese shares. Okay, back on story, way off track. Just pointing out, IWM was really strong last night. I've already said that. QQQ, which is one of the strongest sectors in the US market, hasn't taken off yet. Let me just go around the world. Just have a look at other major, the three economic blocks is what I like to look at. The Americas, the Europeans, and Asia Pacific. If we look at EWG, which is the European, last week Alan pointed out that what he saw, and I agree with him, is a declining triangle pattern with 3 touches at the base. It needs to break, and it usually does break 75% away, doesn't have to be exact, along the length of the pattern. And guess what's happened? Since we spoke last week, the market looks like it's breaking out of this pattern. If we have a look at the DAX, so that's just a different type of accumulation phase that appears to be breaking out. Moving average is starting to point up. Could it come back inside the pattern? It can, but that's a bullish signal. Coming across to the actual DAX index, looking at the market, it's a pretty crude, messy piece of pattern. I drew a very crude W pattern. I suppose the most important thing is it hasn't confirmed, along with the S&P 500. What do we know about patterns? They have to confirm. If they don't confirm, they can fail. If they fail, the market can have another leg down. So that is not calling all clear on the DAX just yet. Coming across to the Shanghai Composite, starting with FXI. FXI, again, Alan pointed out, it was the same sort of pattern. We've got this declining triangle, which looks like it's about to break out. Again, 3 touches of the low, 3 touches of the high. It should break 75% along the length of the pattern, and it has. Everything's looking textbook, technical analysis 101. Coming across to the Shanghai Composite, this is the actual chart, and it is just demonstrating a W pattern which has not confirmed, so it's not a confirmed accumulation phase until it is, and it has to cross its midpoint. All those patterns, all that IWM, SPX, EWG, FXI has a major increase in volume buying behavior by institutions. Therefore, I am reasonably confident that what we're looking at is we're halfway through very large accumulation phases that have not confirmed. Let's come across to Australia. Let's have a look at EWA. EWA looks almost exactly the same as the S&P 500. Again, if it's a W pattern, it hasn't confirmed, but it also has a major increase in volume behavior, so every index is the same. Again, broad-based accumulation. It's kind of exciting because, technically speaking, we should get a very large extension for the rest of the year. Not guaranteed, but that's technically what normally happens. Coming across to XJO. XJO, I'm just going to bring it out to a very large time frame. Let me bring it out to a weekly time frame to start with, and just giving it a larger perspective from the 2009 low. That trend line's obviously being maintained and the market's nowhere near it. And if the market continues on up from here, it won't go anywhere near it either. The market looks like it is accelerating in price. Why do I say that? Because the pullback is sitting on top of, or just on top of, the previous high. Remember, we're looking at very big time frames here. So let's come down to a daily time frame. What does it look like on a daily time frame? On a daily time frame, if I expand the chart up, get rid of all the junk on screen, technically speaking, it is still looking what we've discussed in the last few weeks. Nothing's changed. It kind of looks like, as we discussed last week, an inverted head and shoulders pattern. And if it's an inverted head and shoulders pattern, it really needs to have a good rally from here. A little bit disappointing that the market backed off in the last 2 days, but it is what it is. The only threat to this as a pattern is as it goes up, it's going to have to do a right shoulder. All this is going to take days, weeks, and maybe months to occur. So we're a month for this to happen. And then when it gets there, it has to break through this downward sloping trend line, which has been in place since December last year. So is this an opportunity for short-term movements to the upside? Absolutely. And it should do that. So that's what it should do. That's our analysis. It's backed by volume when we look at overseas volume on EWA. If it doesn't do it, that's when you're going to flick over and go, okay, I need to adjust my portfolio. I need to adjust something. I'll tell you right now, in terms of the US and the Australian market, I have 100% commitment to both markets in 2 portfolios, and I just can't stay out of the market. I always look for reasons to stay in, not to get out. I want to stay in the market. If I'm not in the market, what happens is the market has a really large move and I miss out. The only time I would hedge my portfolio, I'm talking from an investment perspective, is when I see danger or a threat, either technically or fundamentally, or maybe a combination of everything, volume and everything. I don't see that at the moment. It's supporting upward movement, hence engaged. I'll get to that topic in a moment, Ellen. Ellen's just mentioning oil. Just before I get off the Australian market, I just want to quickly look at the VIX. The VIX contract on the Australian market has tanked down for the last 2 days, and the VIX within the Australian market has tanked down within the last 2 days. So that's unusual behaviour. If fund managers were of the view that the Australian market's about to fall over to the downside, it should be the reverse. The VIX and the index should not be correlated. This is unusual behaviour, which is the opposite to what we saw back in January of this year. It's actually bullish, what we're seeing. It's bullish behaviour. Okay, coming down to other interesting bits and pieces. I'll pick up a comment that Alan just put on the screen, and that was oil. If I come across to oil, we may be aware that in the last few weeks we've talked about, in fact last week, reading my paper as I flick it up, I put strong up, but I made the distinction between oil as the commodity and XLE as the energy complex made up of many components. If we come across and look at USO, which is Texas Light Crude, the exchange traded fund, which references that commodity, if I can just adjust my glasses. There we go. And we have a look at USO as it painfully takes an enormous amount of time to get up on my screen. Still not there. If your screen's black, it should be. Still, okay, fine, Lee. Okay, so last week what we were looking at, and this is what we were drawing last week, is an upward moving trend line, but the trend line had touched its, the market had touched its upward moving trend line. Last week I did make the comment, I said the word strong up. The reasons for the strong up was a major increase in buying, institutional buying behaviour coming in last week. It wasn't obvious that it was about to do what it did, but just as that buying comes in, we get comments that Alan's just put in. He said, just read yesterday that the Saudis wanted to curb output, so oil will probably head to $80. It's a positive for upward movements in oil. The other element to that would be Mr. Trump saying, watch out Russians and Syrians, here comes the missiles. That was the fear move in the last 2 nights. That's why it jumped up. So is that an opportunity? Yes, it's an opportunity. It was an opportunity last week. I don't necessarily see that being reflected in specific oil explorer stocks, and I'm not going to go look at them now, but last time I looked, the general energy stocks were displaying the same pattern as XLE. So this is specifically an opportunity in crude oil. Okay, so, and I'm just going to check the volume behavior. Yeah, the volume behavior this week, it's actually backed away a little bit this week, but that's fine. I mean, it's having a huge extension. So volume's coming in here, then market has a big break, volume dissipates, then market backs off. Interestingly, we were talking about this having a strong upward move last week. None of the fundamentals that we're talking about were in the market last week, yet I'm observing strong institutional buying behavior. It tells me that people, somebody knows what's going on. Someone knows what's going on before it happens. Of course they do. Of course they're benefiting by this information. Of course they are. The only way we can pick it up is through the actions of institutions and what they're doing. And we were picking it up last week. There's a rise in volume. Obviously, why? Because they're buying the hell out of the market in anticipation of the fundamentals which had not been released. I know it's really sometimes upsetting that this occurs, because it means that the global financial markets are not a level playing field. Just accept that they're not. But we have tools to pick it up, and you just got to go with the flow. And that's what analysis is. It's not about predicting. It's not about having special information. It's about analyzing in real time and having the tools and the knowledge to go with what's happening. That's interesting. That's an upward strong pattern. It's broken into new high. And now we should see a continuing upward moving market for quite a while. Just give me one moment. Okay. So I jumped from oil. Let me jump across to currency markets. Let me have a look at the Australian market to start with. When I say the Australian market, I mean the Australian dollar through the eyes of FXA. FXA is looking very, very, has been very, very weak, and it's been declining. We know that. We've talked about it many times. That said, it's approaching this trend line. So I would anticipate in the not too distant future maybe another leg down, maybe not. But this market is getting to that point where it finds support. If we take it out to the weekly chart, we are well aware of the trend of the Australian dollar. It's not down, it's up. So this is a counter trend in a grinding upward Australian dollar, and that is being mirrored by the US dollar ASX pair trade on the Sydney Securities Exchange. As I bring it up, and we watch this chart every single week. The US dollar is up on a daily chart in the context of a big downward trend. So we come back to the daily chart on the US dollar ASX pair trade on the Australian Securities exchange, yes, it's strongly trending up. I look at the volume, which is not the volume of this chart, but the volume of the US dollar index. It's still pointing to institutional buying behavior supporting this upward moving chart, and all as I can see on screen is a series of higher lows on screen, and the market's had a pullback. So is there a top just yet? No. Is there a bottom in the Australian on the FXA chart? No, not just yet, but it's getting to the tops and the bottoms of the trend line, so in the not too distant future. Okay, I've done oil, I've done FXA. I just want to go to some of the gold. Let me do gold. And then I've got to go to the strongest sectors of the market. It's important. Having a look at gold. This is a daily chart of gold. Gold, I think I found confusing. I'm going to have to track back. Okay, on last week's comments, I had the words up. The week before that, I said up, supported by volume, up, supported by volume. This week, it has obviously broken up, but the volumes have dissipated, so I don't know with this contract. I'm not interested in gold, and I've told you why many times, because it's such a low momentum contract. I just can't get excited about it. So yes, it's gone up since last week, which is what we're expecting, but as it's gone up strongly, volumes have gone away, so it's liable to do nothing and fall back inside itself or fold back inside itself. So I've got nothing else to say. Okay, I just want to come back to some of the strongest sectors in the market. Why is this important? This is important because if we're right and we're on the right-hand side of a big W pattern in the market, we should get a reasonable extension such as the one in 2010. Other things that tell me that this is probably true, apart from everything I've said so far, are the new highs, new lows, internal information, advancing and declining stocks. The new highs, new lows is not really convincing because there are only 2 new highs last week and 10 new lows. The previous week, there were 3 new highs and 18 new lows. So the lows are decreasing and the new highs are pretty stationary. A different and completely different story on the S&P 500 advancing and declining stocks. The advancing stocks 3 weeks ago were 200 advancing, 291 declining. Last week, it was 226 advancing, 264 declining. And this week, it's 274 advancing and 261 declining. There is a definite trend, strong growth within the advancing and declining raw numbers that I monitor. In addition to that, I've mentioned many times, I look at the volume of advancing and the volume of declining. And I believe last week it was even, which is a worry. Oh no, last week the declining volume was 20 to 30% above the advancing volume. That's not good. This week, guess what? It's flicked over. It's gone reverse. The advancing volume is about 20% above the declining volume. So this is a bullish trend on the internals of advancing and declining, and the volume supports that to be true. Let's go across to sectors. If you're going to hunt around for trades, where should you be hunting? You should be hunting for growth within the strongest sectors. The strongest, this is US, the strongest area in the US is, without looking at too much detail on the chart, is the finance sector, the tech sector, and the consumer discretionary. I can show it to you, make it really easy by going consumer discretionary, tech sector, finance sector, and I've got to add in XME. They're the strongest sectors where you would hunt for opportunity to trade and invest. A couple of weeks ago, I mentioned the declining momentum or strength of XME. XME is the metals and mining, and I said to you, it has declined in momentum, but it is still strong. It's just having a rest. And if it does a right rotation, please watch out, because that is a huge signal of strength. And if you recall, I said that back here on tech. Do you remember that? Just because it's declining in momentum does not mean it's weak. If it does a right rotation, so it's done it again. So XME, watch this space. I've even I went and bought some XME stocks in the US last night and maybe a bit more tonight in anticipation of XME regaining its dominance within the market. So metals and mining, examine it closely, and it's probably a true statement for Australia. Just bringing back all the charts on screen. Oil, that is USO, is on the far right, which meaning it's a really strong commodity. And I'm going to get rid of gold just for a moment. I can see strength in the utilities, and I can see strength in the telecoms. I don't like telecoms, I say it all the time. And the utilities, they're going up because the market's been going down. It is a defensive area of the market. You'll find the reversal becoming true. If we have a move up in the not too distant future, I'm talking the next 2 weeks, what you'll find is that the utilities, that'll rotate and go down again. So don't get too excited about utilities. Stick with what I've just given you. I think those groupings, especially once again, tech, discretionary, and metals and mining, are prime hunting grounds for trades. I'll give you my list again. I keep just a very small list of those 3 sectors, which I own some of the shares within the listing I'm giving you. I'm not necessarily trading them, but I do have at least 4 shares of each of this grouping in my own portfolio. Why don't I do that right now? I'll come back to Australia. Okay, so if I have a look at the 3 sectors, I brought it down to 3 sectors. I've already said this last week. My favourite choice are 6 stocks within each sector. My 6 favourite stocks within consumer discretionary are Amazon, Netflix. I definitely own Netflix. I mean, I just love Netflix. GRUB, I think I've mentioned this to you last week. SFLY, ETSY, and IAC. Okay, I gave you those last week. The tech space, my 6 favourite stocks, 4 of which I own: SPLK, NOW, and the market, none of these are broken yet. They're just still in pullback phase and accumulation phase. SSNC. So these stocks, the strongest stocks from the strongest industries, from the strongest sectors in the market. If the market goes up, they're the ones that should have the biggest extensions. What are we looking for directional trading? Strong directional moves. What are we looking for investment? Growth. FTNT. Okay, so that's the tech sector. And for the consumer, it's not consumer, it's material sector. I've combined both material sector and XME, metals and mining stocks, together. So TX, I own. GGB, I own. STLD, I think I own. I'm not sure about VALE. That's another one. TS, I think I own. X, that's US Steel. Hasn't moved, I don't own that. And the last 2 are not, they're not metals and mining, they're actually wood. A wood, WOOD, is one of the strongest industries within the materials sector at this point in time. And I do own one of these. I'm not sure whether it was RYN or FBR, but both very strong charts. FBR hasn't made a move, but RYN is looking good. Okay, just coming back to the rotation chart for the Australian market. What's strong in Australia? The strongest sectors within the Australian market are clear: healthcare, information technology, consumer staples, XMM. Excuse me, I've got to just have a cough a moment. And a drink might help. Okay. Okay, so back to my list. XMM, metals and mining, and they're your top grouping. So are there things that could be exciting that you can't see. Well, there is. I'll show it to you. Let me turn it all off. And this is what I look for something evolving. There we go. That's the industrial sector, which has been a dog within the Australian context. That should demonstrate or illustrate stocks that are in the process of wanting to break, have been trending down. They don't look like they're trending strongly, but that is something new that I've just included last week into my portfolio mix. So that would be interesting to add to it. One of the biggest worries on the Australian market is this, XFJ. XFJ is doing what's called a left rotation and going back down into the weakening quadrant, which tells me the biggest sector in the Australian market is not strong compared to all the other sectors, which is an enormous disappointment, because we know that we need, as we know, we need two major groupings to push our market up: finance and metals and mining or material sector. That said, it's not necessarily all of finance. It's not looking wonderful. If I bring you to a chart, it's mainly the banks. So don't get fixated on the finance sector is bad. It's the banks. It's just the banks. And we all know why. If they continue to have a Royal Commission and say probably very truthful things, but bad things that are not increasing the reputation of the big four banks, they're going to keep on trending down. That said, these banks, this is Westpac, that looks like an inverted head and shoulders pattern to me. And if I'm correct, should have a decent rally from here. The banks have been horrible. CBA just keeps on looking horrible, goes nowhere. Even if it does put in accumulation phases, the pattern's only half done. We're still probably weeks away from the completion of these patterns, and that would be true because we said that already in the context of the index. It's still taking weeks to complete an accumulation, absolutely a confirmed accumulation phase. Okay, so I'm not going to do a list of stocks, or I didn't prepare a list of any stocks for the Australian market. I can show you what I own if you want. Don't mind showing you that. What do I own within the healthcare sector? I own COH, I own CSL, I own PRY, I own ANN, and I own ResMed. That's my little grouping there. In terms of metals and mining, I don't own a lot. I own IOG, I own OZL, I own CSR, and I own LYC. And that should do. I mean, I can give you my listings for everything, but I'll just overwhelm you with information that you don't use. Just give me 1 sec. I need a quick drink. So in summary, what's the markets doing? At this point in time, as we stand here today, the markets are building bases globally in all indices around the world, but these bases are not confirmed accumulation patterns until we get the crossing of midpoints. Technically speaking, that's what's required. We have plenty of other evidence to say that that's probably what's going to happen, and we also know in the major markets at least trend lines are being respected, so there's no fear to the downside, so it's all happening to the upside and should continue in the next days, weeks, hopefully months into the future, especially because we're coming up to the end of the financial year. I haven't hit my target just yet. So that's it. Okay, Alan's just put in a code, and I'll just put it up. 1 moment. Very quickly. LYC. Guess what? Alan said LYC is my favorite. Guess why I bought it? You mentioned it a few weeks ago, and then it popped up on my analysis. I said, hang on, that code's very familiar. That's one from Alan. And Alan, thank you. It's in my list. Thanks. Please feel free to share. Okay, guys, I think that's it for tonight. I've covered everything I need to cover. I must have been talking very fast because it's only on my side 5:46, but that's it. Thank you very much, and I look forward to seeing you same time next week. Thank you.